Hi, thank you for watching Digging to China. I'm Dong Shong. If you have not done so already, please subscribe to my channel. Thank you very much. Hurun is a research, media and investments group established in the UK in 1999. According to its website, Hurun promotes entrepreneurship through its lists and research. Best known today for the Hurun Rich Index series, telling the stories of the world's successful entrepreneur in China, India, and the world. Widely regarded as an opinion leader in the world of business, Hurun generated 6 billion views on the Hurun brand last year, mainly in China and India. Based on the newly released Hurun Rich List in China, which ranks China's wealthiest people with a minimum net worth of 5 billion yuan, only 1,305 people made the mark this year, down 11% from last year. Their total wealth was $3.5 trillion, down 18%. This year, China's super rich saw their wealth tumble by the most in 2 decades. Meanwhile, the number of individuals with $10 billion fell by 29 to 56. Rupert Hugworth, chairman and chief researcher of Hurun, said, "This year has seen the biggest fall in the Hurun China Rich List of the last 24 years. The year of 2022 is heavily impacted by the war in Ukraine, slowing economic growth in China, prolonged property slump, and zero COVID policies. A 2-year regulatory crackdown has hit China's biggest tech firms such as Alibaba, Tencent. Investors are concerned that President Xi Jinping will sacrifice growth for ideology in his 3rd term, and Hong Kong and the mainland stock markets have tumbled in recent weeks." The biggest drop on the 2022 list comes from Yang Huiyan, the businesswoman behind the Country Garden Holdings. Her wealth fell close to $16 billion. This year's number 1 on Hurun Rich List is Zhong Shanshan, who owns water bottler Nongfu Spring and the vaccine developer Beijing Wantai Biological Pharmacy. His fortune grew 17% to $65 billion. The founder of TikTok owner ByteDance, Zhang Yiming, took 2nd place, but saw his wealth fell 28% to $35 billion. In 3rd place was Zheng Yuqun, chairman of battery giant CATL. Tencent founder Pony Ma posted the 2nd largest drop in wealth of $14.6 billion. He sits on 5th place on the list. Alibaba founder Jack Ma and his family tumbled 4 places to be ranked number 9. China as a market remains vulnerable to further disruption. Still, China accounts for 30% of global growth, according to the International Monetary Fund. Beijing is focusing on policies to keep prices and unemployment under control, as youth joblessness hit nearly 20% in July. To shore up the economy, state-controlled banks are being encouraged to increase loans to infrastructure, manufacturing, and the property sectors. The US-China tensions, unrelenting zero-COVID policies, and deteriorating ties with the West could have a psychological and a material impact on the country's long-term economic performances. Chinese currency yuan has down more than 12% in the past year against a surging US dollar. Further decline is expected, putting it on course for its weakest annual performance in nearly 3 decades. Now, with his firm grasp on power, will Xi Jinping take a new economic direction? When Xi became China's leader in 2012, he inherited a nation of newfound wealth growing at a rapid pace, expanding at an average pace of around 7% a year. The Chinese economy nearly doubled in size over the course of Xi's first 2 terms. Now the situation is different. For the first time since 1989, China will miss its annual GDP growth target. Officially, Beijing points to the zero-COVID policies that explains the slowdown. However, deceleration in growth happened before the start of the pandemic and economic crisis. It includes a meltdown in the property sector, distressed local government finances, and the rising youth unemployment. These are deeper roots that caused the slowdown. Atlantic Council Geoeconomic Center and the Rhodium Group's China Pathfinder together explores the deeper roots. China's slower down, is it a temporary blip caused by pandemic response or a sign that China is splitting from market thinking? Researchers evaluated China's progress, the data spanning from 2010 to 2021, market competition, trade openness, moves towards a modern innovation system, direct investment openness, and portfolio openness. The research shows that China's economy has converged with open market economy norms, although the progress has been uneven. Although China remains behind economies such as Japan, the United Kingdom, and the United States, it has seen significant improvement in innovation and trade, with modest improvements in financial system development. However, its progress in implementing reforms that support market competition and investment openness has been more piecemeal. Looking forward, China's progress in trade openness and innovation will likely persist. Still, there are gaps in that progress, suggesting deeper structural weakness that cannot be overcome quickly, and that might put China at the risk of backsliding. Over the past decade, Beijing has focused on integrating its economy with global trade flows of goods. It has lowered the tariffs it applies to imports, going from a mean tariff rate of around 10% in 2010 to 7.5% in 2021, and has increased the portion of global goods that flow through its economy from around 9% in 2010 to 12.5% in 2021. As Beijing follows an export-led growth model and pursues new trade deals, such as a possible deal with Uruguay, China's barriers on trading goods will continue to fall through Xi's third term. However, Beijing's restrictions on digital trade are of particular note, given the growing significance of digital trade for advanced economies. China's score in this area has worsened since 2014. Xi's administration has placed additional restrictions over the past 8 years. Despite Beijing's trade reforms, exports no longer represent the engine of growth they once were for China. As the rest of the world teeters towards recession, near-term demand abroad for Chinese goods is weakening, and a long-term focus on export-driven growth cannot support a shift towards domestic consumption. Like with trade, Beijing has also implemented policies to improve its innovation economy throughout Xi's first 2 terms. As a result, China now scores higher than Spain, Italy, and Canada in innovation, according to China Pathfinder. This is primarily driven by boosts in China's research and development spending across both the public and the private sectors. Venture capitals has taken off in the past decade as China prioritized the development of new technologies such as artificial intelligence, 5G and 6G telecommunications equipment, and biotechnologies. However, this progress comes with caveats. Through government guidance funds and subsidies, the state still largely determines where innovation takes place. Beijing's crackdown on tech companies also undermines the innovation gains that China has made in recent years. China's market reforms should not be seen as concession to the West. Rather, they are the bedrock of China's own economic growth prospects. Unfortunately, the fear is that Beijing will instead fall back on statist solutions that have defined the economic direction of the end of Xi's second term. This could mean a long-term GDP growth rate of around 2 to 3%, which is a far cry from the 5% analysts forecasted prior to the pandemic. The result: a Chinese economy $5 trillion smaller than projected by the end of the decade. Thank you for watching. Please leave a comment and subscribe to my channel. Just click the subscribe button right here. I'll see you again shortly. Until then, be well.